Ding! Robschild. Nothing I say is investment advice. Welcome to the show where we view financial markets through crystal ball gazing. J.P. Morgan once said, "Millionaires don't need astrologers, but billionaires do." And so we begin. Before I get into the charts, sorry for missing a few market days. I will also not be able to do tomorrow, but this update is for March 5th and March 4th. I didn't do a video yesterday. So we will start today with the S&P 500. Now, this consolidation here, Gareth Soloway on his channel also has been talking about this. It looks like we've pretty much hit sort of this sort of trend line here. If we break below this and stay below it, this could mean a pretty significant drop in the very short term on the S&P 500. Next we have HYT, and this little trend line that I found here, you know, I thought we had broken through and sort of tested it, but we actually ended underneath it. And so, you know, from a very short-term crystal ball stance, this could be showing a little bit of weakness here. This coincides with today's little pop in the VIX. This is the fear index. Anything could happen here. I can look into my crystal ball, and all I see is a fog. I don't know what's going on here. Perhaps a little bit of profit taking, a little bit of, you know, everything's up. The S&P 500 overall is, by historical standards, overvalued right now, sitting at a PE ratio of around 28. That number can get down as low as 7 when things get bad and nobody wants stocks, which happens all the time throughout history. But I move on. Next chart that got my eye, the XHB Home Builders Index. I've been watching this market for a while, commenting on how we've been hitting all-time highs, and I've said, I didn't say, yesterday we had a little topping tail here, which is, you know, this gives the possibility of it being the top, you know, here. This is a possible top here. If we don't break this, the top of the wick here, then it's more likely that this market's going to be showing weakness going into the future. Next we have TYX. I added these, this is the 30-year bond yield, which affects mortgage rates and borrowing rates at the long end of the curve. It affects, you know, when this goes up, it makes technology and riskier stocks lose their luster because the cost of borrowing money for longer periods goes up. And so, but this has been breaking down. We hit this little trend line here that has been a trend line. I have numerous trend lines that hit many places, and whenever you hit a trend line, it's very typical to stop, at least stop at it, not break straight through it. So by this weakness here, I'm kind of seeing that we may break further down to this one, see some resistance there. Maybe we'll stay in here for a while. We might break down to here. You know, they're all just guesses. I'm not going to be... Yeah, I am invested in 30-year Treasury bonds for a little bit, for a longer time horizon. I am expecting within at least a few years for rates to go much lower based on demographics and the way that the financial system is sort of set up right now. And so I love Treasury bonds right now for longer term investment. But yeah, short term, they also look like they might be a pretty good play. I'm not playing that game personally. Now moving on, I have been talking about this market. This is rare earth strategic metals ETF, and it has been doing really well. We're seeing a bit of a breakdown here. We'll see how low it goes. How low can you go? How low can you go? Longer term, if I put this on the max setting going back to 2011, you can see that the value of this industry, has a lot of pain in it. This ETF was worth over $300 in 2011, and now it's only worth $50. And so, something like this can remain undervalued for quite a long time before we see eventually hitting this level again and going much higher. I mean, it's pretty inevitable, crystal ball wise, that you don't have an entire industry that produces platinum and other platinum type metals, the PGMs. It's inevitable that these companies will eventually make money because people do want these metals. They're valuable. They're hard to find. They're very rare. Very rare. There's like 10,000 different kinds of cryptocurrencies, but there's only one rhodesium. There's only one platinum. There's only one lithium. That's not one of the super rare ones, but you get the point. Palladium. All right. We will continue to need these metals, and these companies are, these companies will continue to exist. And for a longer term investment, I see this as an amazing, beautiful opportunity. Moving on, Bitcoin. I'm sure if you follow any markets at all, you've noticed that did we break all-time highs? We either broke it or got right up to the all-time highs. Pretty much like if double tops exist, this could be the epitome of double tops. And then we hit around 69,000. Now we're all the way back down to about 64,000. If I look into my crystal ball, I see Bitcoin going down with a lot of momentum, perhaps. I could be wrong. The ball is not always correct, but that's what I see in my crystal ball. Next chart, silver miners. Sorry about these volume bars. I spent an hour trying to figure out how to get rid of them. I do not know how to do it. They won't go away. But, regardless, silver miner juniors, along with silver, has been doing pretty well lately. We went from $7.84 on SILJ all the way up to $8.84. A very healthy, good return if you were to be able to catch that. I'm buying long term in this area. I had put a good amount of my portfolio in at this little bottom here that you can see has been holding up for quite a while. And again, this is one of those areas where you zoom out on a chart like this, and these companies will continue to exist. We eventually will be using, especially junior after junior, to actually produce silver, especially as it goes up in price, especially as I think this is a great time to be in commodity exposures, especially silver and rare earth metals. The reasoning here is that it's sort of twofold. You look at the S&P 500, and Graham talks about, when interest rates go up, markets typically go down, but you don't know how long it's going to take. It's very well expected that we're still going to see a market downturn. But during market downturns, things like gold, commodity exposure can hold up or even do well during market volatility. And then on the other hand, with inflation and demand, they're underpriced compared to everything else. And so if things just normalize, these kinds of things should, I believe, increase in value. My crystal ball shows me great riches ahead in these markets. Moving on. The last chart of the day, K-Web. This is China. Basically, their version of Amazon is basically controlling this market. We have been seeing, this has been a long suppressed market. The valuation from a very long-term perspective shows that these stocks are at a current price that is lower than they were all from 2013 all the way up until COVID, basically. And so, from my crystal ball, this looks like a great place to own some equity. And so, anyway, on a shorter term basis, I had been looking at this coiling up here, trying to see if we would break. And, a quick break like this is likely to actually reverse. When you see a healthy flag pattern going down, you can sort of catch it going down and before going higher. But, a move sharp enough down can actually pop right back up. This big candle here had shown weakness, but you see a jump down. It's not a solid red. When we want to see a more bearish move, we want it to be solid red. We don't want one of these kinds of patterns. I'm expecting this to pop right back up, maybe form some kind of head and shoulders looking pattern to perhaps move higher. Although, the crystal ball isn't crystal clear on this market. That's all I have for you for today's show. I hope you enjoyed, and thank you for watching. Robschild. Ding!